Meta shares have collapsed over 50% year to date. However, has this been overdone? That's what I'm going to talk about in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up guys, welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner, and let's dive right into it. So you can see here, Meta Platforms is actually down 4% today, and year to date, you can see that they're actually down over 50% year to date. So the decline in the share price has continued from the time in February when they released slower growth figures. And so taking a step back, what kind of caused the share price decline today? And I found two articles that I think might be able to explain it, but overall, I don't think they explain the huge decline that Facebook is facing. So today I noticed that Meta actually settled a $115,000 lawsuit where Facebook's users received housing ads that discriminated against Facebook's user based on race, color, religion, sex, disability, familial status, and national origin. Now, at the end of the day, isn't that what Facebook is? The whole point of Facebook as an advertising platform is that you can determine who you want to send ads to. So for example, not a lot of you guys know, but prior to the pandemic, I did do a lot of stand-up comedy. And one of the ways that I sold stand-up comedy shows is that I would focus in on people that lived within a certain radius of a theater that I was selling. And I focused on only people who had birthdays coming up right before the date of the show. And so that's kind of how I focused in. I got really good results advertising on Facebook. But I understand that focusing certain types of products based on certain ethnicities or demographic backgrounds could be offensive. So I understand why the DOJ would go after them. Meta said that they're going to stop using special ad audience and advertising tool for housing ads by the end of 2022. And they will develop by December 2022 a new system to address racial and other disparities caused by the use of personalization algorithms. And so they inevitably paid a civil penalty of over $100,000, but I don't think that's enough to move the share price down 4% today. The other thing that came up is that Facebook has delayed the time at which they're going to start taking a cut from their creators' revenue. So creators on Facebook and Instagram will not have to share a cut of their revenue with the platform until 2024. Meta previously did say that it'll hold off on revenue sharing until 2023. Now, I don't think, once again, this is a reason which caused the share price to decline. I think the real reason why Facebook's shares are declining, or Meta's shares are declining, is just because a general weakness overall in the stock market and just people not believing in the Meta story, and ultimately people not believing in the metaverse. And I'm going to explain to you why none of that matters, and I think this company is oversold, and I'm going to be looking to add it into my portfolio at $150 per share. So let's move on. You can see here, this is something from eMarketer or in insiderintelligence.com. What platforms do US social video viewers watch on short form videos, so 10 minutes or less? So you can see 10 minutes or less video content, YouTube is still the king. However, Facebook is up there. Notice how Facebook is ahead of TikTok. Now, that's not saying that TikTok won't catch up, but what I'm saying is people are still using Facebook to watch videos, which includes Instagram Reels. Now, that being said, if you were to decrease that time to about 2 minutes, you might see TikTok number one, or you might see YouTube Shorts number one. I don't know. I don't have the data for that. If you guys do have the data for that, let me know in the comments below. Now, this flies in the face of the whole argument that Facebook's growth is slowing and thus Facebook is going away. That's not the case at all, because Facebook's revenues are still growing and we still expect them to grow. Take a look here. You can see that although daily active users are slowing, look at how in 2022 and beyond, I'm forecasting only 3% a year growth. Notice that the daily active user growth is not completely in line with the revenue growth rate. So notice how I'm forecasting 7% revenue top line growth rate in 2022, but I'm also forecasting low double-digit revenue growth rates going forward. And if you look backwards, you can see that the highest daily active user count they ever had in the chart that I'm showing you is 14% in 2017. And in that year, they actually grew revenues by close to 50%. So there isn't a one-to-one link here. And I think part of the reason for this is because more and more advertising revenues are migrating to digital platforms. They're coming to the Googles, the Facebooks, the news websites, etc. And so you're seeing this huge migration of ad spend move digital. Will this trend continue into the future? I believe so. However, it could be mitigated with near-term impacts in the global economy. economy. And that's what might be causing a potential slowdown, because at the end of the day, ad revs are cyclical. So people might be selling Facebook shares right now in anticipation for an advertising slowdown as companies make cuts. You're already seeing companies announce cuts to salaries, so you can see that they could potentially be announcing cuts to advertising as well. But once again, this is a short-term issue to a long-term investment philosophy. And so I look at this as an entry point, not as a reason to sell the company permanently. Although I don't personally have a position in Facebook, but I'm really looking to buy one. When the original hit to the share price happened and it came down to 200, I did say that I'm going to be continuing to watch it until it went under 150. A lot of people in my comments did say that that couldn't happen. It's a pipe dream. And in fact, that wasn't actually a word that was used in the comments. And I just say never. And now you're seeing it happen. And you can see that I'm not the only one that's bullish on Facebook. The average one-year price target by analysts is close to double the current share price of $157. And you can see that average price target is approximately $300 per share. And you can see the highest price targets are closer to $500 per share, or at least $450 per share. So you can see that there's a huge range of value here. And the lowest value is only $185 per share, which is still above what the company is currently trading at. So there's a huge bullish bias from the analyst community on Facebook's shares. Now, one of the reasons why I do believe that people are selling off Facebook's shares is because they don't believe in the metaverse. Here's the thing though. I don't think the metaverse has to pan out because the company's trading so low that it's not even being factored in. So you can see here that Mark Zuckerberg did show prototype headsets, and they did announce that they're going to invest another $10 billion into their metaverse bet. But like I say, and I've written it right here, the metaverse is not being priced into the current valuation. So this is completely upside, minus of course the cash burn of $10 billion in 2022, which is already reflected in the free cash flow valuation or calculation. So in other words, what I'm trying to say is that people are giving zero credit to Facebook for the metaverse. The company is cheap on its businesses, irrespective of the metaverse. So if they start generating massive amounts of income from the metaverse, that could be a real catalyst to these already undervalued securities. And so you can see here, what is my valuation? You saw what the analysts are, but you can see here that it's trading at approximately 60% of its intrinsic value with a 17.5 times multiple, and that reflects a 14.8 times multiple to the expected fiscal year 2022 free cash flow. So that's seriously low. So in other words, I'm saying that this company is trading around 60% of its intrinsic value, and I'm very interested in it under $150 per share. And you can see that I'm not the only one that thinks that way. You can see that Meta in the last quarter was the #1 most purchased stock by super investors. And it looks to me like their average hold price is slightly above $200 per share. So if you're looking to buy into Meta right now, you can potentially purchase it at prices that are lower than what the super investors have paid for the security. And of course, you guys can get access to all of my models at the lower tier of the Patreon. And like I always say, there's absolutely no risk to you, because if you decide to try it out for 1 month and then you decide that it's not for you, no problem. Message me in Patreon. Let me know that it wasn't for you, and I'll completely refund your whole first month subscription. So once again, zero risk to you. That's how much I believe in this product and the research that I provide. And with that said, there's another thing that you guys got to be paying attention to. There is some pain on the horizon in the housing industry. And in order to get to that video, which I completely cover the whole thing, you can get to that video right here.